Welcome to the Deep Dive. Where we like to really roll up our sleeves and dig into the details that matter to you. Today, we're tackling the question I think on everyone's mind. Should you buy Amazon stock at $205?
Hmm.
Our guide for this deep dive is a Forbes article from Great Speculations, published just yesterday, March 4th, 2025. What makes this deep dive, I think, particularly interesting is we're looking at Amazon against a backdrop of some serious market jitters.
Yeah, that's right. On March 3rd, we saw the Dow Jones and the S&P 500 take a tumble,
Oh,
with the S&P 500 having its worst day this year.
wow.
It all kicked off when President Trump confirmed new tariffs, which really spooked investors.
Okay, so the market is on edge.
Yeah.
And that's the context for our Amazon deep dive. Now, the Forbes article dives into Amazon's valuation. And let's be honest, it looks a bit pricey.
Right.
Their price to sales, price to operating income, price to earnings ratios, all higher than the average for the S&P 500. It's enough to make anyone wonder if Amazon is overpriced.
Yeah, it's easy to jump to that conclusion, but remember, valuation is only one piece of the puzzle.
Yeah.
We need to see if their performance justifies the high price tag.
Right.
To do that, let's unpack their financials.
Okay.
The article points out that Amazon has seen very strong revenue growth in recent years. And if you think about it, that makes sense. They've been aggressively expanding into new markets like grocery delivery with their Whole Foods acquisition, and they're grabbing more and more market share in online advertising, which is a huge growth sector.
So revenue growth is definitely a check in the pro column.
Yes.
But what about profitability? Are they actually making money from all this growth?
That's where things get a little more nuanced.
Okay.
The article describes their profit margins as moderate.
Moderate.
Basically, are making money, but their profits aren't as high as some might expect for a company of their size.
Wait, hold on. You're saying their profits are just moderate,
Right?
but they're Amazon, this massive dominant force in e-commerce and cloud computing. Shouldn't we expect more? What's holding them back from raking in even bigger profits?
Well, their strategy focuses heavily on reinvesting profits back into the business for future growth.
Okay.
For example, they're constantly expanding their fulfillment network, investing in new technologies like drones for delivery, and even exploring things like cashierless grocery stores.
Wow.
This constant innovation requires significant upfront investment, which impacts their short-term profit margins.
That makes sense. It's like they're playing the long game, prioritizing growth and innovation over squeezing every last dollar of profit right now.
Exactly. Now let's move beyond the income statement and peek at their overall financial health.
Okay.
Here, the article gives Amazon high marks for their strong financial stability. They point to their low debt-to-equity ratio, which essentially means they haven't borrowed excessively compared to what they own outright. This tells us they're in a healthy financial position and not overly reliant on debt. Plus, they have a high cash-to-assets ratio, meaning they have a healthy amount of liquid assets readily available.
Okay, so financially they seem to have their act together. But this brings us to the part of the article I found particularly fascinating, and I bet you do too.
Okay.
It looks at how Amazon's stock has weathered past market crashes. We're talking the inflation shock of 2022, the COVID-19 pandemic back in 2020, and even the global financial crisis of '08. Talk about a stress test.
Oh, yeah.
This is crucial for you because you want to know if Amazon can hold its own when things get rough.
Absolutely. These historical insights give us a glimpse into Amazon's resilience and ability to bounce back from tough times. Now, Traphis, which is a financial analysis platform that helps investors make informed decisions, compiled data on how Amazon's stock performed during these crashes. They compared Amazon's peak-to-trough decline to that of the S&P 500, which gives us a good benchmark.
Okay, so let's start with the inflation shock of 2022. What happened there?
Well, Amazon's stock took a significant hit, falling 52% from its peak in early January to its lowest point in late December. And that sounds pretty scary, and it was a big drop.
Yeah.
But keep in mind that the S&P 500 also experienced a peak-to-trough decline of 25.4% during the same period.
So Amazon definitely felt the pain, but it wasn't completely out of line with the broader market, right?
Right, and here's the crucial part. Amazon fully recovered to its pre-crisis peak by February 2024, demonstrating its ability to not just survive, but thrive even after a major market shock.
Wow, that crash recovery time is impressive. I wouldn't have expected that.
Yeah.
Okay, let's rewind the clock to 2020 and the COVID-19 pandemic. Everything was in chaos, and the market definitely felt it. How did Amazon hold up?
During the pandemic, Amazon stock fell 22.7% from its peak in February 2020 to its trough in March 2020. Again, a noticeable decline, but in this case, it's interesting to note that the S&P 500 actually experienced a steeper peak-to-trough decline of 33.9%.
Interesting. So this time, Amazon fared better than the overall market during that initial crash. That really highlights their position as a go-to during times of uncertainty. And did they recover quickly like they did after the inflation shock?
They did. Amazon stock fully recovered to its pre-crisis peak by April 14th, 2020. That's remarkably fast, especially considering the global disruption caused by the pandemic.
Okay, so 2 for 2 on bouncing back from major market crashes.
Yes.
Now let's travel back to 2008 and the global financial crisis. Things were pretty dire back then.
Yeah.
How did Amazon handle that economic earthquake?
The global financial crisis was a true test of resilience for any company. Amazon stock fell 65.3% from its peak in October 2007 to its trough in November 2008.
Ouch, that's a massive drop. How did that compare to the S&P 500?
The S&P 500 experienced a peak-to-trough decline of 56.8% during that same period. So while Amazon's decline was substantial, it wasn't drastically worse than the broader market's performance.
And the million-dollar question, did they manage to bounce back from that one?
They did, though. This time, it took a bit longer. Amazon's stock fully recovered to its pre-crisis peak by October 2009. This demonstrates their ability to navigate even the most challenging economic environments.
So they faced 3 major market crashes,
Yeah.
managed to recover each time.
Yeah.
That's got to be a good sign, right? But I'm curious, what were the factors that enabled them to weather those storms so effectively?
Well, in 2008, it was their early adoption of cloud computing with Amazon Web Services that provided a stable revenue stream when their retail business faced challenges. During the pandemic, their e-commerce dominance in essential services like grocery delivery really shined. And during the inflation shock, their diversification into areas like advertising and subscription services helped cushion the blow. Essentially, each time they had a different ace up their sleeve.
That's fascinating. It's like they've got this adaptability built into their DNA.
Right.
They find ways to thrive, even when the world throws them a curveball. Okay, so we've covered the market context, delved into Amazon's, potentially intimidating valuation, unpacked their financials, and even looked at their impressive track record during past crashes. Before we move on, are there any key takeaways from this first part of our deep dive that you think are particularly important for our listener?
I think the biggest takeaway is that while Amazon's valuation might seem high at first glance, their strong revenue growth, decent financial stability, and remarkable resilience during past market downturns suggest there's more to the story than meets the eye. However, we still need to dig deeper into other factors like competition, future growth drivers, and potential risks before making any judgments.
Excellent point. It's clear that there's a lot more to consider before hitting that buy button. But that's exactly what we'll do in the next part of our deep dive, so buckle up because things are about to get even more interesting. All right, so we've established that Amazon has a knack for bouncing back from tough times. But let's not get ahead of ourselves. I'm thinking back to the Forbes article, and it's pretty clear that there are some potential risks and concerns that we need to address. After all, no investment is without its downsides.
You're absolutely right. It's crucial to approach every investment with a healthy dose of skepticism and carefully weigh the risks alongside the potential rewards.
So let's play devil's advocate for a bit. What are some of the things that could potentially derail the Amazon train? What should our listener be wary of?
Well, one obvious risk is competition. The e-commerce and cloud computing landscapes are incredibly competitive, with new players constantly emerging and existing ones upping their game. While Amazon currently holds a dominant position in both markets, that doesn't make them immune to competitive pressures.
Exactly. It's like what they say in the tech world. Disrupt or be disrupted. Just look at what happened to companies like Blockbuster or Kodak. They were once giants, but they failed to adapt and ultimately got overtaken by nimbler competitors.
Precisely. So for you, the question becomes, can Amazon maintain its competitive edge over the long term? Can they continue to innovate and stay ahead of the curve?
That's a great question, and it's one that I bet a lot of investors are pondering. Can you give us some concrete examples of the competitive threats that Amazon is facing?
Sure. In e-commerce, you have companies like Shopify empowering smaller businesses to set up their own online shops and platforms like Walmart and Target, investing heavily in their online presence and delivery infrastructure to compete directly with Amazon.
Right, so it's not just about fending off small startups anymore. They're facing off against some seriously deep-pocketed rivals.
Exactly. And in cloud computing, Microsoft Azure is gaining ground and posing a real challenge to Amazon Web Services. Google Cloud is also in the mix, attracting businesses with its data analytics and AI capabilities.
So it's a multi-front battle for Amazon. They need to be firing on all cylinders to stay ahead of the pack.
Absolutely. Another concern that we need to discuss is regulation. Amazon's size and influence have attracted a lot of scrutiny from regulators in recent years, and there's always the possibility of increased government oversight or antitrust actions that could impact the company's operations.
Yeah, that's definitely something to keep an eye on. We've seen how regulatory crackdowns can really shake things up in the tech industry.
Exactly. Regulatory risks are inherent in any large, powerful company, and Amazon is no exception. Think back to the antitrust cases against companies like Microsoft or AT&T in the past. Those had a significant impact on their businesses.
Right. So for our listener, it's important to monitor the regulatory landscape carefully and assess the potential impact of any changes on Amazon's business. It's like adding another layer of complexity to the equation.
Agreed. And let's not forget about Amazon's reliance on consumer spending. A large portion of their revenue comes from e-commerce sales, which are directly tied to consumer confidence and discretionary spending.
You're bringing up a good point. If the economy takes a downturn, people might cut back on their online shopping, and that could directly impact Amazon's bottom line.
Precisely. Economic downturns can be unpredictable, and Amazon being heavily reliant on consumer spending could be particularly vulnerable.
So we've got competition regulation and economic sensitivity on our list of potential risks. Anything else we should add?
One final factor to consider, and we touched upon this earlier, is Amazon's valuation. As we discussed, the company's stock is trading at a premium compared to the broader market. While this high valuation could be justified by their growth prospects and dominant market position, it also means the stock has a lot of built-in expectations.
It's like they're setting a really high bar for themselves.
Exactly. And if they fail to meet those lofty expectations, or if investors start to doubt the sustainability of their growth, the stock price could take a hit.
So it's a bit of a double-edged sword. High valuation signals growth potential and market confidence, but it also makes the stock more susceptible to volatility. That's definitely something our listener needs to factor into their decision-making process. All right, we've spent quite a bit of time exploring the potential risks, which I think is essential. But let's not end on a gloomy note. Let's shift gears and talk about some of the potential rewards. What are the factors that could drive Amazon's stock price higher in the future? What's the bull case for Amazon?
Well, the most obvious driver of stock price appreciation is growth. If Amazon can continue to grow its revenue and earnings at a healthy pace, investors are likely to reward that performance with higher stock prices.
And they do have a pretty impressive track record of growth, especially in e-commerce and cloud computing, as we discussed earlier. But are there enough opportunities left for them to keep growing at such a rapid pace?
That's the million-dollar question, isn't it? But I believe there are still plenty of opportunities for continued growth in both of those markets, as well as in emerging areas like artificial intelligence, healthcare, and even space exploration.
Wait, space exploration. Now that's thinking outside the box. I didn't see that coming.
You see, Amazon's founder, Jeff Bezos, has a long-standing interest in space exploration through his company, Blue Origin. There's speculation that Amazon could leverage its technological expertise and resources to play a role in this burgeoning industry. It's a long shot, but it's an example of how Amazon is constantly looking beyond its current horizons.
Okay, I can see how that kind of ambitious thinking could get investors excited. So growth is one key driver, but what else could boost Amazon's stock price? What are the other aces up their sleeve?
Another potential catalyst is increased profitability. As Amazon matures and scales its operations, there's a real opportunity for them to improve profit margins and generate even more cash flow.
Right. We talked earlier about how their profit margins are currently moderate, so there's definitely room for improvement there. If they can convince the market that those profits are on the horizon, that could be a major boost for the stock.
Exactly. And don't underestimate the power of market sentiment. Investor psychology plays a significant role in stock price movements, and Amazon's reputation as a disruptive innovator and a market leader creates a sort of halo effect that attracts investors and drives up demand for its stock.
It's like that cool factor that Apple has always had. People want to be part of something successful and groundbreaking, and that can translate into higher stock prices.
Precisely. And Amazon has cultivated a similar image as a forward-thinking, customer-centric company that's constantly pushing the boundaries of what's possible. That kind of reputation is a valuable asset in the stock market.
Okay, so to sum it up, we've got growth, profitability, and market sentiment as potential drivers of Amazon's stock price. But of course, as we discussed, there are also risks to consider, such as competition regulation, economic sensitivity, and the potential for the company to fall short of its high expectations.
It's a complex equation with a lot of moving parts. There's no easy answer to the question of whether or not Amazon stock is a good buy at its current price.
It sounds like we've given our listener a lot to chew on. It's a lot to digest, but it's essential information for anyone considering investing in Amazon. What would you say is the most important takeaway from this part of our deep dive?
I think the key takeaway is that while Amazon has a lot of things working in its favor, including its dominant market position, its track record of innovation, and its potential for future growth, there are also significant risks that investors need to be aware of. It's essential to approach this investment with a balanced perspective, weighing the potential rewards against the potential downsides.
Well said. It's not a slam dunk decision. Whether or not Amazon stock is a good fit for our listeners' portfolio depends on their individual risk tolerance, investment goals, and overall financial strategy.
And remember, this deep dive is just a starting point for your research. We're providing you with a framework for thinking about Amazon, but it's crucial for you to do your own due diligence, dig into the details, and make a decision that's right for you.
That's great advice. It's like we're giving them the pieces of the puzzle, but it's up to them to put it all together.
Exactly. And as you delve deeper into the world of Amazon, stay curious, stay informed, and never stop asking questions. That's the best way to navigate the complexities of the stock market and make sound investment decisions.
Now, before we move on to our final thoughts, let's quickly recap what we've covered so far. We started by examining the broader market context, noting the recent downturn triggered by President Trump's tariff confirmation. Then we analyzed Amazon's valuation, which, as we saw, is quite high compared to the broader market. We explored Amazon's financials, highlighting their strong revenue growth, moderate profitability, and solid financial stability. Then we took a deep dive into Amazon's performance during past market crashes, noting their resilience and their ability to bounce back from adversity. And in this part of our deep dive, we explored the potential risks and rewards associated with investing in Amazon, digging into factors like competition, regulation, economic sensitivity, growth prospects, profitability potential, and market sentiment.
It's been quite a journey, and I think we've covered a lot of ground. But we're not done yet. We've got some final thoughts to share with you that will hopefully tie everything together and provide you with some additional food for thought.
That sounds great. I'm eager to hear what you have to say.
Mm.
But before we jump into the grand finale, I want to take a moment to remind our listener about the source of all this valuable information.
Our deep dive today has been inspired by a recent article from Great Speculations on Forbes titled, "Should You Buy AMZN Stock at $205?"
This article has provided us with a wealth of insights into Amazon's business, its financial performance, and its prospects for the future.
We encourage you to check out the full article, which you can find linked in the show notes, to explore these topics in even greater depth.
And now for the grand finale, our final thoughts on Amazon. All right, so we've analyzed the numbers, weighed the risks and rewards, and explored the potential for both growth and disruption. It's been quite a journey. Now comes the big question, what's our overall gut feeling about Amazon?
That's the question every investor is wrestling with right now. And as you know, we can't give financial advice. What we can do is share our insights based on all the information we've unpacked.
Exactly. But let's be real, predictions are always fun. So without stepping into financial advisor territory, what's your take on Amazon's long-term prospects?
Well, if I had a crystal ball, I'd be on that beach you mentioned earlier.
Right.
But seriously, I do think Amazon is well positioned for continued success. They have a strong leadership team, a culture that embraces innovation, and they've proven time and again that they can adapt to changing market conditions.
You know, it's funny, when I think about Amazon, I think back to when they were just an online bookstore. Who could have imagined they'd become this massive, multifaceted company? It's almost mind-boggling.
It is remarkable, and they're not afraid to experiment and take risks. That's essential in today's fast-paced business world. Think about their ventures into areas like healthcare, grocery delivery, and even those cashierless Amazon Go stores.
Right. They're constantly pushing the boundaries, almost like a tech version of those old explorers sailing off into uncharted waters.
Yeah.
But speaking of pushing boundaries, I'm really curious about this whole space exploration angle you mentioned earlier. Is that a serious possibility or just a bit of futuristic fantasy?
It's definitely more on the speculative side right now. But with Jeff Bezos' passion for space and Blue Origin's advancements, it's not entirely outlandish to imagine Amazon playing a role in that arena. Even if it's just providing cloud computing services or logistics support, the potential is enormous.
Okay, so growth potential is definitely there. But what really struck me during our deep dive was their ability to bounce back from those market crashes. It's almost like they have this secret formula for resilience.
Well, I wouldn't call it a secret formula, but they do have a few key ingredients that contribute to their resilience. One is diversification. They're not solely reliant on e-commerce anymore.
Right.
They have cloud computing, advertising, subscription services, and more. This spread helps cushion the blow when one area faces challenges.
That makes sense. It's like having a diversified investment portfolio. Don't put all your eggs in one basket.
Exactly. And another factor is their customer-centric approach. They're obsessed with providing convenience value and a seamless shopping experience. This builds loyalty and keeps customers coming back even during tough times.
I've got to admit, their customer service is pretty impressive. I once had an issue with an order, and they resolved it quickly and went above and beyond to make things right. It definitely made me feel like a valued customer.
That's a perfect example of how their focus on customer satisfaction translates into tangible results. And lastly, don't underestimate the power of their data and analytics capabilities. They have a wealth of information about customer behavior preferences and trends. This allows them to anticipate needs, personalize offerings, and stay ahead of the curve.
It's like having a giant crystal ball, only it's powered by algorithms and data points instead of magic.
Exactly. They're constantly learning and adapting based on real-time insights. That gives them a significant competitive advantage. But let's not forget that even with all these strengths, there are still potential pitfalls. We talked about competition heating up, regulatory scrutiny intensifying, and the reliance on consumer spending. These are all factors that could impact their future performance.
You're absolutely right. It's important to stay grounded and acknowledge that no company, no matter how successful, is invincible.
Yeah.
Things change, markets shift, and unforeseen challenges arise.
Exactly. And that brings us to the most important point we want to leave you with today. Investing in any company, even one as dominant as Amazon, carries inherent risks. There are no guarantees in the stock market.
It's like that old saying, past performance is not indicative of future results.
Precisely. So, while our deep dive has hopefully equipped you with a better understanding of Amazon's strengths, weaknesses, and potential, the ultimate decision of whether or not to invest is up to you. It's a decision that should be based on your individual financial goals, your risk tolerance, and your own thorough research.
It's excellent advice. And as always, we encourage you to check out the full Forbes article that sparked this deep dive. We've got the link for you in the show notes.
Absolutely. And remember, this is just the beginning of your exploration. Stay curious, stay informed, and never stop learning. The world of investing is constantly evolving, and the more knowledge you have, the better equipped you'll be to navigate its complexities.
Well said. And on that note, we'll wrap up this deep dive into the fascinating world of Amazon stock. Thanks for joining us today. We hope you've enjoyed the journey.
Until next time, keep those brains curious and those knowledge tanks full.